Should Target shareholders be terrified? By www.options-trading-education.com. On the news that Amazon.com bought Whole Foods Market, the stocks of Target, Walmart, and Costco all nosedived. Despite a recovery, these stocks are still down 3%, 0.5%, and 2% respectively. CNBC covers the aftermath of Amazon's Whole Foods buy. Amazon's strategy will make retailers like Target and Walmart ask themselves questions about where retail is headed, Lebovitz said. But he warns investors to not become too wrapped up in the immediate deal aftermath and how securities have reacted in the days following. Wall Street needs to think more about what this Amazon Whole Foods buy is going to look like long term before jumping to conclusions, he added. If I was a shareholder of Target, I would be terrified, Tom Forte, managing director of Maxim Group, told CNBC in an interview on Friday. Grocery was just one category for Amazon to expand into. Should Target shareholders be terrified at the prospect of competing head-to-head with Amazon for grocery shoppers? What is the history of online grocery shopping and home delivery? Pre-internet days. 30 years ago, before folks used the internet, a company funded by the likes of Cargill and Rothschild set up in a warehouse in Minneapolis suburb, took orders by phone, and delivered groceries to people's homes. They were in business 2 years and came to a break-even point, but not a profit, and folded. The cost was $10 million. The problems, according to their CFO, were overhead costs of working out of a high-priced suburban warehouse and the fact that people were a lot pickier about items like potatoes when they were delivered to the door as compared to what they would pick out in the store. Internet-era grocery delivery. Taking orders via the internet, Webvan delivered groceries in the pre-.com bubble days. Unfortunately, while they raised a lot of money, they did not control costs, and when income was slow to come, they went bankrupt. In the last few years, online grocery shopping is back, according to Wired. In San Francisco, bright green Amazon Fresh trucks rumble through the downtown delivering groceries straight to apartment doors. Walmart is sending its own grocery trucks down the same streets. Even eBay and Google will bring packaged food right to your door. And at least one app-powered startup, a latter-day Webvan in spirit, if not in strategy, promises to deliver nearly any groceries you want. The rationale for success this time around is that players like Amazon have a lot of money to cushion any early losses, and they have developed a sophisticated delivery infrastructure that does not need to be built from scratch. Amazon, Whole Foods, and Target, etc. If Amazon was already into online ordering and grocery delivery with Amazon Fresh, why is the purchase of Whole Foods such a big deal, making you wonder, should Target shareholders be terrified? It may have to do with targeting a specific consumer niche. Whole Foods Market sells high-quality and sustainable sourced produce, but at a high cost. Many refer to Whole Foods as whole paycheck. However, for someone with the money, a trip to Whole Foods is not a budget buster, and people like good quality. Now link this to Amazon Prime and the trust that Amazon customers have developed over the years. The fact is that Amazon may simply be going after the high-end grocery shopper and consumer. That would fit with the fact that Target took a bigger hit than Walmart when the acquisition was announced. For more insights and useful information about options and options trading, visit www.options-trading-education.com.